Awesome. So without further ado, let's get straight into it. So I'm only going to recap the last week because the last month is a lot of different trades, but the last week was probably one of my better weeks of the year. Week 2 of May, I also had a pretty good week as well, but this week felt a little bit special just because I was able to catch a few very, very explosive moves on this week and trade with you guys live and show you some of those moves as well, which was absolutely awesome. So I want to go through all of these. I'm not going to go just through the good ones. I'm going to go through the good ones and the bad ones, because the most important thing that I want to really go through today and kind of explain is the fact that sometimes you will mess stuff up. And even if you've been trading for years, you'll still make mistakes, right? You're not always going to get every single trade right. That's the thing about trading, is you're not going to be, perfect, and you don't really have to be. You can still make a ton of money without being perfect. As long as you follow your system, then the worst thing that can happen is you take a small loss. And that's what a system is there to do. It's there to protect you. And the reason why I'm so passionate about using a system and sharing that system with you guys is because of the fact that if you just follow it, your losses are going to be incredibly small and your winners are going to be big. And yes, you will mess stuff up. And yes, I did mess a ton of stuff up this week. And I'm honestly disappointed in my performance. And you'll see, a $100,000 week and you'll be like, this guy's, not grateful for, what he's doing. But the truth is, I'm always striving to get better. So to me, it's not about the money, it's about the process and the system. And I always think I can get better. So you don't want to get too comfortable with what you have, because the truth is, like, you can make a lot of money and then the next week you could lose it. And when you're in a strong market environment, you have to know when to press and when to take advantage of the moves in the market. So that's kind of what I'm going to explain today, break down everything there. So without further ado, let's start off going through the Monday, because this was the only losing day of the week. Now, for these two trades that I took, they were both swing trades that I closed on Monday, but they were entered a little bit before. But I want to break down what I was looking on these and maybe some of the mistakes that I made so that you don't make the same mistake, right? So the first trade that I took was on the ticker AEHR, and I'm going to pull up both TradeZella and TradingView for you guys so you're able to see and kind of get an idea of the entries that I took. So everything on TradeZella is very easy to see the entries, and you can also see exactly where I exited on this. So on the ticker AHR, what I was looking for was a breakout that was going to obviously set up for a new move to the all-time highs. And I actually traded this one twice, which is kind of funny, because the thing is, right, sometimes you're going to get a good entry and then you'll mess up your exit, or you'll get, stopped out, and then you can always re-enter. The issue that I had on this one was that both times I got stopped out, unfortunately, which happens, right? Sometimes it'll take 5 tries to get a good trade before it really is ready to go. So that was the idea on the ticker AHR. Now let's see it on TradingView so you guys can kind of get an idea of what I was looking at. So again, this was a stock that was rallying for the last few months. It went up 141%. It started to go sideways, built out a staircase, and the volume was drying up really nicely. When it started to break out on this day right here, over this 101 level, I bought it for a breakout, and I used low of day stop loss right here. Now you can see the next day, I ended up getting stopped out when it broke the previous day's low right here, right? So my system protected me. I took the trade off, and then from there, right, I was watching for a re-entry. This day right here, we did not break through the previous high that was made on this move right here, so I did not enter it. On this day right here, I entered it when it broke through those highs, put my stop loss at the low, and then again, this made a pretty big move lower, and I ended up getting stopped out twice. So sometimes you will get stopped out twice, sometimes you will lose twice, but again, my system ended up saving me from a massive loss, because imagine if I would have held this ticker all the way down here for a 30% move lower, especially with options, I would have taken just a way bigger loss in this case. So yes, I got stopped out twice, right? You could see right here and right here, but at least my system saved me from a much bigger loss. If we look at the options contracts after I exited the position, you'll see kind of an idea of how much bigger of a loss I would have taken if I didn't, exit where I did. So I exited it right here at 6.5, and the contracts got as low as 2.3. So I basically would have lost probably another 50 or 60% for almost no reason, right? Just because I wanted to stay in the trade or I didn't want to accept the fact that I was wrong. But the thing is if the setup fails, there's a good chance you were probably either too early or you're just wrong on the trade. But regardless of if you're early or you're wrong, you still want to just get out of the trade and accept the fact that it was a losing trade. So that was on the ticker AHR. And then obviously, this didn't really do much the rest of the week. It kind of just went sideways. And now it might be, setting back up. The thing is, it's better to accept the loss, get out of the trade, and then move on and wait for it to set back up than it is to stay in the trade, hope and pray that it goes back up, not have any really actual tangible setup on it anymore, no thesis, no conviction behind it, and then it ends up becoming a bigger loss and you're just dreading it the whole time. It's always the stocks or the, setups that you let go, that you don't take a $1,000, loss on that end up becoming the $10,000, $15,000, $20,000, massive losses. So always think about it like that, right? It's always a loss that you never want to, kind of part ways with that becomes the biggest. But if you can actually follow your system and use a stop loss, then now you have something that's repeatable, it's tangible. You know exactly where you should be using, inputting your stop loss. And for me, that's always going to be at the day's low, relative to obviously where I enter the trade. So again, sometimes you'll try the trade twice and it'll work. Sometimes you won't. And some of you know this on something like Qualcomm, right? This is one where if yesterday you bought it, you would have got stopped out after your first trim probably on a break even. If you bought it back again today, you actually would have been up 20% on this move. So sometimes, buying the trade back and using stop loss at the low of day works very well for you. Sometimes you'll get stopped out multiple times before the trade even starts to work. And again, that's a part of the system and a part of having very small losses. But remember, the whole point is if you do get stopped out, you lose so little. And if you win, look at how much you make, 25%. So even if you got stopped out 5 times on this trade, just a 1 day's move would have covered all those losses, considering you had a 5% loss on each of those trades. So that's why the system works so well, because we're looking for big wins on moves like this that are set up very well for them, right? And then we're taking a tight stop loss if the trade doesn't work well, and then you can always re-enter, like I did on AHR. And like you probably should on trades that mainly stop you out. Because the thing is, if the trade stops you out, it doesn't necessarily mean you're wrong. It might mean you're a little bit early, and then you can always get back in when it starts to show you signs that it's going to work again. So that was the first trade that I took on Monday for a loss. And then I took another trade on Monday for a loss, which does hurt a little bit, right? So again, I'm human, right? Just like everybody else. These do hurt. Don't get me wrong, because the thing is, if you zoom out on NVTS, you'll end up seeing that I actually got stopped out before the move even happened on this day right here. So unfortunately, right, sometimes this does happen, right? It doesn't only happen to you, it happens to me as well. And I've been doing this for years. And it's a part of the process. But what could I have done better on this? That's what I'm asking myself, right? I'm not going back and I'm not dreading on what could have been. I'm going back and I'm asking, what should I have done better on this trade? So first of all, the trade that I took was a inside day high break. So you could see this stock was breaking out of a very nice staircase right here. It made a strong move higher on very nice volume. And from there, it set up an inside day, another inside day, and then it broke out on this day right here. So when it broke out, I bought it, and I actually was able to get a trim on this one. So I bought it at $2.64. I trimmed 1/5 at $3.35. So initially, I actually did make a profit on this trade. The issue that I had on this trade was that the next day, the stock ended up gapping down and it blew past my break-even stop loss. So remember, sometimes that's going to happen, right? We talked about this. When a stock gaps down and it goes past your stop loss, the good thing is that you had cushion, but the bad thing is that, the stock is obviously opening much lower and below your cost basis. So you have a few things that you could do in that case. You can either take the trade off, right away, or you could wait for a 5-minute orb. In this case, on this stock, I waited for a 5-minute orb. It ended up holding that. And then the next day, it actually did end up stopping me out. So when it opened weak and it broke the 5-minute orb on the next day, I ended up stopping out for a 1.8 loss. And that comes out to about a $5,300 loss, or a 20%, a 20% loss, which is not too bad considering the fact that the stock gapped down on me, right? So anything here, I probably wouldn't have changed. I think my entry on this setup was actually very good. What should I have done though? I should have 100% re-entered this the next day right here, because look at what it did. It actually set up an undercut and reclaim. This is exactly what we've been learning the past few days. It undercut this level right here. It undercut the previous day's low, and it reclaimed perfectly and closed above the previous day's low. So a re-entry right here would have been perfect. Imagine you would have taken an entry here, stop loss at low, and then you would have caught a 3-day move, which was absolutely massive. And actually, the chart on TradeZilla is not even showing the real move that NVTS made today. It was even more crazy, right? And again, missing that really does hurt, because I sold it at $19 and it moved all the way to 29. That means the stock itself moved $10. Imagine how much the options are up. They're probably up about 5 or 6x. And again, the reason why I'm sharing this is because I want to, kind of break it down to you guys and explain to you that nobody's going to be perfect, right? You're going to mess some trades up. Some trades you're going to miss. It's about the ones that you do catch, though, that really should matter, right? Those are the ones that should matter and that you should really focus on. And it's about getting better and repeating the process over and over again. And eventually, you'll get, really confident in buying back stocks like this that you should have been in. So this is one that I definitely regret not buying back. There was actually a few ways you could have bought this back. You could have bought it back on a breakout like this out of this kind of small flag. You could have bought it on the UNR off the 21 EMA. And you could have maybe even bought it on this day right here. I know a few of you guys did, Thursday, May 21st, when it triggered above the high break. And you could have caught a pretty nice move. But again, like I said, right, sometimes you're going to mess some stuff up. It's about being real with yourself, journaling, and telling yourself what you could have done differently. So what I would have done differently for sure, you can go into your notes right here as well, and you can start typing, next time when the stock gives me a re-entry, I have to take it. And that's a good way to reinforce that you have to, do exactly what you said that you're going to do. So always good to write this down to reinforce that. And you can obviously take more notes on what you think you should have done better versus what you actually did, right? So again, there's going to be the good, there's going to be the bad, right? Most important thing is, at the end of the day, you want the trades that do end up not going your way and that are quote unquote bad to be small losses, right? If you can keep your losses small to less than 1% of your account, the winners should take care of themselves, meaning that they should, be able to carry you through the losers. So again, you could see, on this day, I did lose $2,000, but the days that I won were, just much, much bigger than the days that I lost, because of the fact that I managed my risk. And even though I did take some losses that were much bigger than I should have on AHR, for example, because it did gap down, I still ended up managing my risk, well. And whenever they did stop out, I ended up cutting those positions and getting out of those positions. So let's see if there's anything that I took on Tuesday. There wasn't. I didn't take any trades on Tuesday. So some days there's going to be days where you don't take trades, right? Again, if you go back to my calendar from April, you'll actually see that there was 1, 2, 3, 4, 5 days of the week of the month that I actually didn't take a trade. So some days there was 1, 2, 3, 4, 5, 6, 7 days. So basically a whole week of not taking a trade during the weeks. There's going to be some days where you don't take trades, right? In a very hot market like we've been in, it's going to be much more tough not to take any new setups, because there's so much stuff that you want to take. But sometimes it's good to know when to sit out and wait for stocks to develop and set up. A good time usually to know if the market needs some time to set up is when it's extended from the moving averages, right? When it doesn't really have much of a staircase pattern, and when it probably needs to pull back. So the reason why I didn't trade on Tuesday is because we weren't really doing much. We were pulling back. I didn't know if we were gonna, break down lower and come down to the 21 EMA, and I wasn't really getting any confirmation that this wanted to go, higher. But on Wednesday, notice how we ended up breaking this high right here, breaking out of the range and then pushing to these highs. So the market can give you a lot of clues on when you want to be involved and when you want to probably sit out and just be a little bit more patient, wait for the market to set back up and all that good stuff. So it's always important to keep an eye on the market. I showed that on the live trading on why I always, watch the NASDAQ, especially from trading tech stocks, keeping an eye on, the overall market rather than just looking at, tunnel visioning just on the individual stocks, because sometimes it's important to see what the market is doing in that case. So no trades were taken on Tuesday. Now, on Wednesday, there was 2 trades that I took. The first one, obviously, the biggest trade of the week, which was absolutely insane. I know many of you were, able to catch this one as well, but it was it was on the ticker ARM. So I had 2 ways that I traded ARM. I traded both shares and options on this. I've been in shares on this for a while. But I only added options on this day right here when it started to break out. So I want to kind of talk about the thought process behind ARM. This is obviously a stock we've talked about so many times, so you probably know what I was watching, but I want to kind of break it down and explain a little bit more in depth why I was even looking at something like this in the first place. Well, first of all, you can clearly see it has a massive staircase pattern, right? So the stock made a big move up. Since the last few weeks, it's just been consolidating and setting up. Now, the moving averages, so if we look at TradingView, you could see the moving averages were also catching up perfectly. So moving averages were catching up, right? You hit the 8, 21, 21 EMA, and you could see the stock was making kind of these higher lows and lower highs. This is how a compression pattern works, and this is exactly what you want to start looking for the next few weeks as the market continues to set these patterns up, everybody. If you can find patterns that look like this, you're going to make a ton of money. When a stock compresses like this, goes sideways, and then makes an explosive move, it happens because it's compressed, right? Because it has no other choice than to make a big move when it starts to break out of its base because of the fact that it has that compression. So you're thinking about it as kind of like a spring, right? The more coiled it gets, whenever you release it, it has to make a pretty big move. It has to spring back, right? That's what we're looking for. We're looking for a coiled spring within the market. And whenever you start noticing that all the moving averages are stacked like this and that the stock starts to get very tight, this is called a volatility contraction pattern. And it usually creates some of the biggest moves. Now go back to NVTS and you'll see it actually did the same thing. It pretty much created that very tight coiled spring. Then it broke out, made a massive move. It actually did the same thing here as well. Went up, created that tight coiled spring, then boom, went up, right? Went up, coiled spring, went up. And you'll notice there's so many stocks in the market right now that are doing exactly that. So if you can train your eyes to look for these coiled springs, you'll know what the next ARM is or what the next NVTS is because you'll see it. You saw the patterns work already, so you know that the next time something like this rolls around, this is going to be the same exact setup, if not maybe even a better one, hopefully, if you can catch it. So that's why it's always important to review your trades and maybe even review the stocks and the setups that you missed. That way, whenever something like this rolls around again, you have the conviction, you have the pattern recognition to start taking these setups. So the entry that I took on this for my options position was on the break of this high. So there was actually a better entry, which I'm a little bit upset that I didn't take, on this day right here where it put in a UNR. So if you guys remember, we were talking about UNR where a stock breaks below the previous day's low and then it reclaims. So you could see on this day, the stock broke the previous day's low, reclaimed. This actually would have been a better entry than the one I took here, which would have been absolutely an incredible entry. But even the entry that I took was good. But you could see one thing that's important. It actually wasn't during the breakout. So I didn't buy it as it was breaking out. I bought it the day before. And how did I know that it was probably going to break out? Because it was so coiled into the right side of the base that it was just starting to look ready. And what you could start seeing and what you notice is you could see the volume was so dry about 7 days before. And then on this day right here, the volume started to pick up a little bit. You'll start noticing that stocks that are ready to break out and make moves higher start getting very, very dry with their volume, meaning there's not a lot of volume. But then when they start looking to move again, the volume picks up slowly and slowly and slowly because institutions are getting into those positions and they can't really hide those orders. They're pretty much hitting the tape. So the volume is going to rise naturally because institutions are buying into those positions. So what I ended up doing was obviously buying it on the break of the inside day high, which is another entry tactic that you could use. You could pretty much think about it as a trigger. If you guys remember, the trade that we actually took on Qualcomm was the same thing. We took a breakout over the previous day's high. So if you're struggling to find your trigger levels, or if you're struggling to find where you should buy a stock, a good point is usually a break of the previous day's high. Why is that? Because when you zoom down, you'll notice that the break of the previous day's high usually always aligns with the pattern, right? So this is the pattern right here is kind of like a flag. The break of the previous day's high aligns with the break of this pattern, and it's telling you that instead of downtrending, now we're starting to uptrend, and we're probably going to make a pretty big move higher. So prior day's high is a good level to use if you don't have another level that it makes a little bit more sense. And on ARM, that's what I ended up trading. So on the break of this high right here, I ended up buying into that spot right there. And you could also see, on the lower time frames, it was starting to pick up volume right as it was pushing. So right here was my entry into the end of the day. It was starting to pick up volume right as it was pushing out through that spot. If you look at the 5-minute or even the 15-minute time frame, you could see some volume was coming in. And even here, when it was starting to break through the day's high, more volume was coming into this, and it ended up closing pretty strong, giving me some cushion. Then the next day it absolutely ripped. Another entry you could have taken could have been a break of this level right here, which we talked about as well, break over 228. The reason why that could have been the breakout is because whenever the stock took that level out, it was actually now confirming that it was not making any more lower highs, and it was actually starting to make a sequence of higher highs, right? So this is a high, higher high, higher high that I was making right here. And it's not making lower highs anymore, right? Because it's breaking out through that downtrend line. So that could have been a great entry as well. I know some of you bought it on that day. You could have also bought it here, right? So there's really no wrong answer in terms of your entry when it comes to these type of trades. It's more so whatever level makes the most sense for you. But to me, of course, the earlier I can get into a move, the better. If I can buy it down here instead of having to buy it all the way up here, I'd way rather do that, because if I already buy it up here, half of the move on the day is pretty much gone. And then your stop loss might be a little bit too far away at that point to make sense. But that's a trade that I took on the ticker ARM, and you can see so far 188%. I still have a lot of this open as well. And I also want to touch on a little bit of my, scaling out strategy, because this is something we talked about as well, right? Notice how when I execute my scales, I actually don't sell too early. Too many people will sell too early. So if you go down to the lower time frames and you look at my sells, I actually didn't sell too many times, right? I sold twice on this first move up right here, where you had obviously a clear breakout. And this was my initial trim. So remember, right? You want to make sure that whenever you're buying, so I had 50 contracts on this position, right? When you hit your first take profit, you're going to be trimming your position in 25%, right? So I trimmed my position in 25%. So right here, I exited 10 and 4, which is, that's pretty much, about, to be exact, I think that's like around 27% of the position on the first trim. And instead of trimming the whole rest of the day, right, I waited until the next day we opened up, we made another strong move, and then I ended up taking another trim at the open because of the fact that obviously we were gapping up and we were extended from the moving averages. Now remember what I was saying, right? Remember what I was saying. Whenever you're trimming your positions, right, with options, you're going to use 2 targets. So the first target should be your first trim, where you manage it based off of the resistance level that you're looking to target. In this case on ARM, there's no resistance because of the fact that it is at all-time highs. So what you could do is, in this case, you could use an RR multiple, meaning at least 2R. That could be your first trim, or you can use the Fibonacci's. So you measure the low to the high of the base, and then you could use these Fibonacci levels as your target. So obviously right here we have 0.27, 0.618, -1, -27, -618. Usually for my first target, if I'm using this, I'm going to use the -0.27. But with options, remember, we scale out twice. So first time right here I scaled, second time right here I scaled, and you can see it within the executions. Now, after the third trim, right, you are supposed to let the 8 EMA trail it, okay? I did take another trim on this day today when it gapped up. Reason why is because we are so extended from the moving averages. So remember the one rule that I talked about. When you're 3x extended from the 8 EMA, right, according to the ADR percentage, that also constitutes a trim, especially with options. Now, I'm already up about 800% on these contracts, right? So at this point, there's no reason not to just let them ride, right? This is one thing that's incredibly important. In a bull market like this, where there's so many good opportunities, you have to let your stocks ride. You have to let the market play out. Because the thing is, right, ARM sure could pull all the way back down here to 260, and I might lose like 50% of those profits. But what if it goes to 400 in that time, right? Now I triple, 4x, 5x those profits. So you always have to think about it in terms of risk to reward. And if you're already in the money, and if you're already in a position where you should just be able to hold, there's no reason to sell too early. So now I'm using the moving average to trail. I did trim this 3 times. So, usually you're supposed to do 2 with options, but if you get an extension from the 8 EMA, that's a sell rule on both options and shares. So just keep that in mind. But yeah, this was the biggest trade that I took on the week. I mean, it absolutely paid, beautifully. And I also took the same exact trade with shares as well. And I only took 1 trim on this one so far. So you could actually see the exact entry that I took. So I bought this one on a UNR right here on this day, right? This was on a weakness entry with shares. I ended up trimming some after hours right here when the stock had earnings. And then today I took my, this was on Thursday, I took my second trim on shares. But notice again, I'm not selling too early. So only 2 trims so far. And the reason why I trimmed on this Thursday was the extension. Now I'm letting the moving averages work. I'm letting this trail the EMA. So you can even do this on TradeZella and add the EMA. But until we break under the 8 EMA, there is no reason to sell because this can just continue to go higher, especially if you have shares. You do not want to sell too early. And I'll show you guys another example of why that's important in just a second. And this is why it is so important to make sure that you are holding your winners long enough. Because if you catch a massive move like this, but you sold everything on the first day, what does that do for you? It does absolutely nothing. So you want to make sure that you hold your positions for a long period of time. Now, the next trade was NXPI. This is one that I've actually been swinging for a little bit of time. I actually ended up adding to this one as well. So what I do sometimes is add to winners. If the trade starts working well, I end up adding to the position, which obviously helps you, kind of get more in the position. So I started this one actually pretty small, at a pretty small size. I think about like $10,000. And then for me, a max size position is usually around 30 to 50,000. And then when it started to work, I added more into that position. The idea that I took here on NXPI was it was setting up in a very nice looking post earnings gap base. So if you look at this kind of move right here, gapped up on earnings, very nice volume, and then it started to go sideways, build out this nice base. And again, this is another one that I bought on a UNR on this day right here. So UNR the low, bought it on this day right here, stop loss at the low. All right, very simple. Okay, this day right here, stop loss doesn't get taken out, no reason to do anything. This day right here, stop loss doesn't get taken out. And the trade starts working and it gets back through the previous day's low. That tells you that this can now be an ad, right? Because notice how now, right, it might have not been ready on this day right here, but now when it starts to kind of set up and maybe even when it breaks out, you can start adding more into the position, especially if you had a small size position. Now, the only thing that is a little bit unfortunate on this one is that I ended up getting my first trim off of it right here at 9.7 and then 12.5. But I got stopped out break even on the next day, even though my cost basis was a little bit lower. And this is the one downside of options is sometimes the Greeks, the data, the decay on them will force you to get stopped out of a position much higher on the underlying price than where you actually bought the option, which is a little bit unfortunate, which is a part of options, right? But the thing is, if you catch a strong move very quickly, you will, make a lot more money a lot more quickly. So just keep that in mind. But obviously, I would have loved to be in NXPI today. So like I mentioned in the beginning, right, a lot of trades I messed up this week, or that could have been much better, and I ended up not having, these trades on. And if I would have, probably would have been much of a bigger week. And I still ended up, coming out with a really nice week. So sometimes it's all about just needing 1 or 2 big ones. And you will mess some stuff up. It's always important to review and see what you could have done better. In this case, what I could have done better is probably just rebought it. And that's pretty much the moral of the story for this week. If you get stopped out of a position, it's important to use stop losses, right? I don't want you to get the idea that you shouldn't use stop losses just because everything's going up. I know it's easy to do so and come to that conclusion. It's like, well, if I just didn't use a stop loss, I wouldn't have gotten stopped out and then the stock would have ended up ripping. But what happens, maybe that works for a week, 2 weeks, 3 weeks, but what happens the next time around that it doesn't work and you lose basically everything? Everything that you did, right? You made money basically doing the wrong thing. So you end up giving it all back to the market. The money that you make in the markets that you don't make with the system is the money that the market owns anyways, and it'll come back and it'll take it back from you. So it's always important to understand, right? You can always re-enter, and that's the one thing that is the moral of the story for this week. Always look for a re-entry. There's so many different ways we could have actually re-entered this. I could have bought it on a 30-minute pivot. Remember, we were talking about this off the 8 EMA, or I could have bought it on a breakout today when it broke through these days highs, or I could have bought it on like a 5-minute opening range this morning when it ended up gapping up and breaking out. So moral of the story, look to buy back your stocks if they stop you out, especially the ones that you really want to be in. This is one that I would have loved to just hold just because it was breaking out of such a big base here on the weekly. Like it's just a massive base, retested here, then broke out. So again, moral of the story, look to buy back on positions that you might have got stopped out on. Stops are the most important thing in the world. I know it might not seem like it sometimes, especially in a very strong market, but I promise you, if the market turns just a little bit and you end up getting into a position you don't stop out and then it turns and it goes down and down and down every single day, you would have wished that you used a stop loss. So building those good habits do indeed go a long way. Trust me when I say that, because I've been through a lot of these experiences. So that was the day here on Wednesday. So close some of these ARM calls, close some of these NXPI calls. Unfortunately, got stopped out on those. Break even. Now the next trade that I took was actually a trade that we took live together on Qualcomm, and another trade that I messed up, or not that I personally messed up, but a trade that could have been much better to me. Right now, this was a super nice setup, very, very similar to kind of Intel and the way that a lot of semiconductors have been setting up. You can see you have a strong move up, stock goes sideways, it dries up the volume, and then on this day you can see it breaks the previous day's high, volume comes in, ends up breaking out, making a nice move, right? Very, very nice setup. So all I did was look for the break of the previous day's high. Now, if you look at the lower time frames, you'll see exactly how I executed it. The moment it broke the previous day's high right here, you can see on the 5-minute time frame, I ended up buying it. My stop loss was the low of day. Now, this one actually did hit first trim right here. So this was my target, 210. Ends up hitting it perfectly. I took my first trim right here and I set my stop loss to break even right here. This is where I got stopped out for break even. So I basically didn't lose anything, didn't really make much. I did make $1,200, but in terms of percentage wise, I only made a 5% ROI. But then the stock ends up coming all the way back down and breaking this low of day, right? Now, this happens sometimes on stocks that might be a little bit crowded or that are not ready to go higher right away. They shake some people out and then they actually end up making the real move. Now, what could have been done here? Just a simple reentry, just a very simple reentry, right? You could have just bought it back right here, put your stop loss at low, and could have gone on with your merry day. You would have had cushion into the close because it closed all the way up here. And today you would have been probably rich because this thing absolutely, absolutely ripped. So yeah, another one that's, a little bit unfortunate where I should have definitely bought back. And like I said, moral of the story today and for this week, buy back your stocks, because most of the time you're probably looking at the stock for the right reason anyway, because it's a good stock. It just might not be ready right away. And it might, you might be a little bit early, and you could always buy back in if it, gets back to your trigger. Only thing to note with that though, is if the stock ends up making a really big pullback like this and then reclaims and the low of day is too far, I probably wouldn't take it. But if it just kind of sweeps the low like it did here, it barely moved below the low. I mean, it was only a few cents or maybe $1 below. That makes sense, right? That's a great re-entry because it's still so close to the low of day. And you'll see a lot of stocks actually end up doing that. So that was a trade that I took on Qualcomm. We actually took that together in the live trading. And then I took another trade near the end of the day on the ticker RDW. And this one actually ended up being a very nice winner today. I actually have a lot of the positions still on. But this is a entry tactic that we talked about a little bit, which is called, a pivot off the moving averages. So I want to show you guys this one on TradingView because you can see it a little bit more clear. Now, first of all, reason I'm watching this stock to begin with, this is a stock that is in the space, drone, and kind of satellite theme. So this has been one of the strongest themes in the market. It's also a stock that's breaking out of a massive weekly base. It's also a stock that has its highest weekly volume ever, which is definitely something that you should watch, because when a stock has its highest weekly volume ever, there's something happening here, right? This isn't, someone's aunt buying it. This is institutions pouring into this thing. So when that's the case, that's a stock that you want to watch. Now, the reason why I bought it yesterday was because I was looking to buy this stock for a while. All I was waiting for was for it to tap the 8 EMA and give me an entry. And you can see this was the first day that it did, right? These other days, right here and right here, it was off the 8. It wasn't, nearly at it. This day right here tapped it perfectly and ended up giving you a really nice reaction. So remember, the thing that you want to do whenever you're buying off the moving averages is you don't want to just randomly buy, because you don't know if the stock is going to start going higher off that spot. I like to wait for either a 30 or a 15-minute pivot to confirm, right? So for this trade specifically, I used a 15-minute pivot. If you're not familiar with what that is, it's basically the first 15-minute green candle that forms off of a key level. So right here, you can see we have one red candle, two red candles in a row. The first 15-minute green candle that formed right off the 8 EMA, which was right here on the daily time frame, is this one. All right, you mark the high of that candle and you mark the low of that candle, and basically you only buy the stock when it breaks through the high of the candle. So right here was your break through the high of the candle. You buy right here. Your stop loss goes to the low of the 15-minute pivot, which is right here. From there, you're in the position, and as long as you get some cushion into the close, you can swing the position. So I ended up buying the 15-minute pivot on this one. Got some nice cushion into the close. It closed very strong, and then today, obviously, it rips 13%. The whole position's up about 80%. So very nice move so far on this. This is the power of buying relatively strong stocks. So stocks that are uptrending, stocks that are in strong themes into weakness, meaning into the moving averages, into key levels, right? That's something we talked about. We did talk about breakouts a lot, but we also talked about buying these stocks on weakness and buying them into the moving averages and into key levels. And the reason why this is important is because a lot of the really good entries that you'll get is on stocks that you're already positioned before maybe the breakout, right? And it makes it much easier to just hold through and catch a really nice move on those stocks. So not obviously every single stock will be one that will work off of the 8, but a lot of these really good ones have been. If you go through and you start kind of looking through and seeing how many stocks have actually just bounced off the 8 and made a very strong move recently, probably going to be most of the stocks in your watch list. Like a lot of these have made really strong moves, or even off the 21 EMA. So looking to buy stocks off the moving averages that are in a trend, that are setting up, is a really nice way to get yourself a proper nice entry and sit in some of these positions before the big move even happens, which is perfect because you can catch obviously first a very big move, but if you're in options, you can catch the price appreciation of the options and have a really nice day there. So that was the trade there on RDW. We already talked about me closing some of the ARM shares on this day as well. And then last but not least, today is the day that I closed out some ASTS. So I actually want to review this one as well, which was pretty good. First of all, let's go over OSS. This was another one that I added on the day. Very small trade so far. I'm still long this one. And it was a share trade. So this one was one that I was watching for the last few days. I actually probably should have bought it on this day when it was coming off of the 8 EMA. So again, if we go on TradingView, you could see it actually gave you a UNR on this day right here, right off the 8 EMA, which was pretty much perfect. Probably should have bought it on this day. Wasn't able to get it. I could have even maybe bought it on this day when it broke out through the inside day high. But today I was watching it and I told myself I can't miss this stock because it's just been such a, it's such a good setup and also such a good mover. Like this thing's been uptrending very well the past few months. So I bought it through the prior day high right here, or not prior day high. I bought it through the range high right here at 17.04. Now, one thing that a lot of you have asked me throughout the challenge, and overall question that I get commonly, is how do you pick a trigger level? There's so many different levels to use. The answer is I wouldn't necessarily use this level right here rather than this one. The reason why I prefer something like the one that I had here is because there's more tests. So there's 1, 2, 3, 4 rejections of that level, whereas right here there's only one. So the level that is tested more times is usually the level you care more about. You could still use this one right here. It's not the end of the world. You're only buying it like a few cents later. But regardless, you're looking for a key level that the stock is tested multiple times, and then you could look to take your entry on that. So yeah, I bought some today. I actually ended up taking my first trim today as well. So very quick, trim as well at a 10R, which is pretty crazy to think about getting that within the first day. But you could see basically on the lower time frames, if we pull this up, let's look at the hourly without regular trading session hours. So you can see, yeah, right as the stock was starting to break out through this pivot, was looking for that buy on this name. Go down to the lower time frames, you can see a little bit better. The moment it broke that level right here, bought into that. Stop loss obviously at the low right here, and then ends up hitting the R that I need to take a trim. And again, remember, on something like OSS, there is no left side of the chart, so you have to look to take a trim into strength. Move your stop loss to break even. Now this is a completely risk-free trade, so my stop loss is at even, right? So worst comes to worst, the stock ends up coming all the way back down to my entry, stops me out, I get out for break even, or actually I do make $335 because I took my first trim. Now, if it becomes a massive winner, right, and it ends up running like another, I don't know, 100%, then I make 100% return, right? So you're pretty much what you're doing, and the goal is you're taking off some risk off the table. You're putting your stop to break even. You are taking some profits on the trade, and then from there, you are basically letting the trade run and go higher, right? Which is the way that you're able to hold winners without having to stress too much on it. Imagine if you're in a full position where you didn't take any profits on it, and it's just thousands of dollars, and just riding there without having any kind of like a risk-free move, right, or any cushion. That would be kind of tough to handle in a sense. So yeah, that was the trade there on OSS. Still in this one, still kind of developing. I also took another trade today, but I won't cover that because I haven't exited out of that position yet. But I did want to cover the trade that I took on ASTS, which was another pretty big one right here on the ticker ASTS. All right, so yeah, this was one that has been moving really, really well actually. I just haven't really taken much profits on it. I've kind of just been letting this one ride. It's already at 100%. But I want to show you guys what I was looking at for this name. So really good entry I got on this one. It was at the end of this day right here. And it was right off the moving averages. So again, remember, a lot of the buying that I do is going to be, off the moving averages. The reason why is because of the fact that, that's the spot where most strong stocks in the market are going to react and then give you a really good buy, right? So again, remember, what do we wait for if there is a moving average tap? We don't want to just buy randomly off the 8 EMA. We want to wait for a 30-minute pivot. So notice right here, this is what a 30-minute pivot is. The stock goes red, right here, red 30-minute candle, red 30-minute candle, first green 30-minute candle right here. You mark out the high and you mark out the low of that 30-minute green candle, boom. And then the moment the stock breaks the high, which I think was like right here, that's your entry. Your stop loss goes to the low of the 30-minute candle, right? As long as it doesn't take that level out, no reason to stop out. You sit in the position. Obviously, into the end of the day, this one gave me some nice cushion, so no reason not to swing this position. And then, it ends up making an absolutely fabulous, run from here, and an absolute, push, a massive push higher. So the important thing to understand is, first of all, what is the setup on the stock? So the reason why I was even watching this, if you zoom out to the weekly, you'll see it has a massive weekly base like this, right? Second thing, it's off the weekly moving averages. Third thing, it's in a strong theme and sector. So ASTS is obviously in the aerospace theme. It's in the that space sector that has been just so strong over the last few months, especially going into the SpaceX IPO. So like there's a catalyst behind some of these moves, and then also obviously it has the staircase setup, right off the moving averages, and the volume patterns are absolutely beautiful. I mean, every single time this thing has gone up, it's gone up on really good volume. ASTS was actually another name we talked about multiple times during the challenge, that could have been really, really nice for a potential entry. And this one, in my opinion, is just getting started. So if you look at the contracts that I have on this, I actually have August calls. So there's no reason to sell out of this position too early. I did trim some into this level right here because of the fact that you can clearly see, there's resistance. Remember what I said, with options, you want to trim twice. And then now all I'm going to have to do is just let the moving averages work. If this is going to end up truly going higher, it'll hold the moving averages and go higher. Like I want to show you guys, for example, RKLB, right? Imagine you bought RKLB here and now you trimmed it twice. Maybe you had options, maybe you had shares, whatever it is. You trimmed on these 2 times right here, or maybe even trimmed, somewhere higher up there. Now you trail with the 8 EMA. And what you'll notice is when it hit the 8, it bounced perfectly. It hit the 8, bounced perfectly. There's no reason to sell too early on some of these really good stocks, because a lot of times these are going to be stocks that can go higher for much, much longer without breaking the moving averages. Again, if you're like in something like NVTS, just always remember this, right? You're not smarter than the moving averages. Try to wait, use the moving averages to manage your position, because the thing is, most likely you're going to sell too early if you don't let the moving averages put in that work, and if you don't trail the moving averages. A lot of these stocks can make moves that you can't even comprehend. Like NVTS can go to $100, all right? Is it going to be fairly valued at $100? Probably not. It's probably going to be incredibly overvalued, and I would not tell anyone to buy it up there. But could it? 100%. Because the thing is, the market could stay irrational for longer than a lot of people could stay solvent. And the thing about that is, when you're in a position like that, you want the market to get irrational. You want these big moves to happen, and you want to use the moving averages because they tell you when the trend is going to be dying off and when the trend is going to be losing some of its steam. So it's important to use those moving averages to let the trade work and not sell things too early. So for example, if you're in an arm, let the moving averages work. Let this come up, right? Let this come up, let it work off the moving average, and I promise you it's probably going to continue to hold it, right? Go back to Marvel right here. Notice how every single time it taps the moving averages, it goes higher. Tap the 8, went higher. Tap the 21, went higher, right? If you would have sold it too early, here, without letting the moving averages work, you would have missed out on a massive move. Go back to Intel, right? This one hasn't even broken the 21 EMA, and some people are selling this one too early. Will it go sideways? It probably will. But the thing is that's okay, right? Sideways is not the end of the world. It just sets up and then it goes back up. That's pretty much what a lot of these stocks are doing. See, ARM did the same thing. It went up, set back up sideways, and then made a very big move up. So if I could leave you guys with a few lessons from the trade reviews for the week, most important is use your stop losses, okay? Sometimes in a bull market, in a very strong market, it might feel like you can break your rules, make money, get away with anything, right? You probably can for a little while, but what happens when we get out of a market like this? Or what happens when the market slows down a bit and you lose everything that you made? It just doesn't make sense. There's no reason to go through 4-5 months of hard work and then lose everything within a trade or two, because you can't, respect your losses and your stop losses. Always respect your stop losses. The second biggest thing we learned is definitely look for re-entries after the initial, failure on a trade that you take. Sometimes your trades will fail and then they'll end up working maybe a few days after. You could still look for a re-entry. You could set an alert. You could wait for them to get back through the level that you initially bought them at, or you could wait for another entry setup to set up on those. But keeping an eye on those stocks is definitely a good way to make sure that you don't miss them if they end up kind of pushing your direction. And then number 3, and in my opinion, the most important, don't sell too early, right? Because if you sell too early, right, that's the difference between a good trade, maybe even outperforming the market, and retiring early. I kid you not, right? There is so much money that you can actually make in these markets that holding one of these winners, 2 of these winners, 3 of these winners, just for another month or 2 can mean early retirement or a nice trade, right? We're not looking for just nice trades, right? Nice trades, they come and go every single day. We're looking for actual big, massive winners but we're using a system to be able to manage those positions. We're not just praying and hoping that they go up. We're using a system, but as long as the stock doesn't stop me out and it doesn't take out my exit strategy, I want to stay in that name and I want to catch a massive move higher. So that's pretty much everything that I have in terms of the trade recaps, guys. Any questions that you might have on anything that we talked about, go ahead and ask. Now is the time to do so.